Minute. This is Tony Novak here to share a few points on saving taxes and staying out of tax trouble. Let's jump right in. Today's topic is year-end bonuses, December 30th. Here we are at year-end bonuses coming in either now before the end of the year or in January for the 2024 work year are common either way. But no matter when they come in, they are taxed in one of two ways commonly, and I'm going to add a third and fourth way that I've heard of that are not common, but worth mentioning just in case you run into it. So the first way is that they are run as a separate business expense outside of payroll. That seems to be common in a lot of companies. I'm not sure why they don't run it through payroll, but they often do not. And in that case, the tax law says that, first of all year-end bonuses are wages and they're taxed as wages. The law says that the employer may just apply for any amount, any bonus less than $1 million, which is all of my small business clients, can just withhold 22%, whether that's too high or too low, doesn't matter. Just withhold 22% and send that into IRS. And when the individual files their tax return, they'll either get some of that back or they'll have to pay more. 22% is too high for most lower middle income working class people, have a marginal tax rate less than that, but it's too low for higher income taxpayers. So executives would wind up owing money in that event. The third way, rolling up to one. So the second way is to actually do it through payroll. So whatever settings you have, whatever percentage is normally withheld from a paycheck, it would be applied. If deductions are withheld for your 401k, if 6% of your salary goes into the 401k, 6% of the bonus would go into the 401k. That, to me, is the easiest and most common way for small businesses. A third way I've heard is that individuals, knowing that a bonus is coming in January, actually log on to payroll and temporarily change their, pretty much everybody has a secure payroll portal, can go on and customize. You can go on and change the exemptions and the amount withheld, the extra amount, or reduce the amount withheld, and change the 401k contributions if you already know that you're at the limit otherwise. So it can, let's call that the manual method. Not common, but I did hear of somebody doing that just over the weekend. The last way, which I hear about, which is the accountant's nightmare, I guess, is that an owner, particularly in small cash-based businesses, just gives everybody a cash or a check in an amount completely outside of the accounting system, and that will wind up causing accounting messes later on, both for the individual and the business. So somebody has to catch up and make those adjustments, and if you don't, certainly the government will, because they will see that eventually coming through as pay to employees on a W-2 or 1099. So those four ways, two common ways and two weird ways. Hope that's useful. I would love to hear your thoughts, comments, feedback on the topic. I'm easy to reach online, or contact me for a one-on-one at taxproblems.cpa.